Hello guys, welcome once again to Traders Delight. How have you been and how has been your trading sessions? I hope you guys have been getting a lot of good results. Thank you for your comments. Thank you for your feedbacks. I really appreciate them. If you are new, you're welcome to Traders Delight, a channel dedicated to sharing trading strategies and trading knowledge that can really help you become a very profitable trader. If you're new, I congratulate you because this is the channel you've been waiting for, you've been looking for. I encourage you to please subscribe to this channel, turn on notification bell, because all the videos you'll be getting from here are quality. We try to put as much effort into it to ensure that every information you get from here are information that helps you a lot. For the old guys, I really appreciate you guys. Thank you very much for the feedback. Thank you for the likes. Thank you for inviting your orders. Thank you for the feedback and the comments. I really appreciate it. All right, before I go into what I want to share with you today, let me take one more minute to tell you guys that the Traders Delight mentorship program is still ongoing. If you are interested, kindly check my video on this channel and follow the instruction there. Very easy to join and it's free of charge. So you join and there's a lot of information there that's going to help you. You join and then you get you can catch up with the rest of the team. Right, today want to start like a series, and the reason for this is if you have been conversant with my channel, you hear me say in my videos that the success of the best traders out there who are very profitable is hinged on two things. I used to say the understanding of the charts and the understanding on how to use indicators. Actually, the two things I just explained now can be put together under one heading, and that is called technical analysis. Actually, in trading, there are two types of analysis for any type of trading, either stocks, either commodities, either synthetic indices or forex, depending. There are two types of analysis, and that is the fundamental analysis and then the technical analysis. For fundamental analysis is really conditions that are based on maybe news, the sales of the commodity, and some external stuff that really affects it. However, for this video, I'm focusing on technical analysis because that is what's going to be our focus for a couple of videos going forward, and we want to see how we can break things down and get the best. So when we say technical analysis, is a trading discipline that we employ to evaluate investment and identify trading opportunities. So it's based on evaluation, based on analysis, based on observing statistical trends. You use that to gather facts, gather things, gather the past behavior of price, and then you want to look at to see if you can predict the movement of price and see if that is going to be to your advantage. So the fact that whenever something has been done before, you from past records you can be able to predict some things about the future, although there is no 100% assurance that the new behavior of price will be predicted. However, if price have formed a pattern, it is easy to predict, and this is how very great traders out there get to maximize the market. So that is it. However, I want you to note something. The basis of every technical analysis is price action. The basis of every technical analysis is price action. So you ask and say, okay, what is price action? Price action is just the movement of any securities price plotted over time. Now, the security can be stock, it can be forex, it can be synthetic indices, it can be commodities. But when you plot the movement over time, you plot it with time, then you are going to get what is called a price chart. So, and that chart tells you the action of the price over time. So when you say price action, you are looking at the action, the behavior. You are looking at the activities of price over time, all on a chart. So you're able to see it all on the chart. You can look at it for activity or of price might be different. You can see for the past minutes. You can look at it for the past maybe 5 minutes, for the past 15 minutes, 30 minutes, depending on the time frame you're looking. Even you can observe it for the past days, or the past weeks, for the past months, even for the past years, depending on the commodity you are trading. This helps you to pick up certain characteristics of that commodity, and then you are able to say, okay, this is how this commodity behaves. Now, a point that you should note is this: all commodity do not behave the same way. Just like if you are observing, take for example, you pick like 10 men and you are observing them. Because they are men does not mean they will behave the same way. So if you observe their behavior over time, you realize that some particular patterns will be peculiar to them. So you realize that you see what is peculiar to A might not be peculiar to B. But if you understand the pattern of A, you can use that pattern to predict some future behavior of A, and also the pattern of B to predict some future behavior of B. So this is what is used in analysis. So when you are using this to analyze and then to look at it, either a stock, commodity, or any other asset, and then you are using this to predict the short-term behavior or the long-term behavior depending. This is called price action. So from this, the first secret I want you to observe is this: if you are trading a certain commodity and a strategy that you are using is working for it, it might not work for another commodity like that. So don't assume because somebody said this is strategy, you apply the strategy to a particular commodity and then you take it to another commodity and then you expect it to just apply to that. No. What you need to observe is to look at, okay, what is the behavior of this new commodity, new chart, new stock as against this strategy, which is why there is always the need to test a strategy, a pattern. Test it to see if the chart is playing along with the strategy. If not, discard it. You don't need such. All right. So this is very, very important. Price action is the basis of every technical analysis, and then every calculation decision you are doing you are taking it from the behavior of the price over time. So like I told you again, let me remind you, this is not an assurance that because price has behaved that way before, that it will behave that way in the future. However, the probability that it might behave like that is what traders leverage on. So what you are leveraging on when you are doing technical analysis is the probability that because price behaved like this before, it should behave like this again, or it might behave like this again. And on that, if you are correct, you get the result. But if you are not, you quickly minimize your losses and then re-observe the pattern of the chart again. All right, so what does price action tell you when you are trying to look at it and say, okay, what information can I get from price action? So you can from price action interpret using the charts, and then that you plot the price against the time, and then you realize that you can use that to spot and interpret trends. When you look and see, you might be able to spot that, okay, price is on an uptrend. That means price is increasing, or price is on a downtrend, or which is price is decreasing rapidly, or price is on a range, which is the fact that price is steady, not really changing, things like that. So it's going up and coming down on a particular short loop, so that's like a range. So, and then many traders use candlestick charts since they help to visualize price better. Candlestick, like I explained before, where you are able to see the different parts of the candle, the high, the low, the open, the close, the body of the candle. Let me show you a candlestick. All right, this is what a typical candlestick looks like. So you can see the candlestick on the left is a bullish candlestick. That's why you realize that it has the open here, it has the low here, it has the close here, and the high here. So, and this one over here is a typical bearish candlestick. You can see that here is a low, but instead of having the open, it opens at the top and then close at the bottom. So you can see this is the real body of the candle. This is called the upper shadow, and this is called the lower shadow. So most traders use this on the price chart so that because it's able to help them review more information as regards price. So it's advisable that you use a candlestick. However, if you feel comfortable with the other form, either the line or the other form, you are free to use it. So from the candlestick, you're able to identify the open, the high, the low, the close value as regards the session you're observing. All right. So in addition to the visual information that you get, how the charts are formed, many technical analysts use price action to calculate indicators. When they try to use indicator, you can use price action to do that. So the goal is to find order in the similarly random movement of price. When you're using indicator, you are trying to find order. You're trying to find some patterns that you can follow and use to predict the commodity. All right. So sometimes you look at it and you're able to indicate the bulls, which is the upward movement, or the bears, which is the downward movement. Or you are able to observe if price is gaining momentum or losing momentum. So this is all part of what price action. All right. So how do you use price action? Now, it's not as if price action is one particular tool like that. It's just your ability to look at the chart and able to bring out the information from the chart based on your approach. You get it. And you realize later on, I'm going to tell you, price action is very subjective in the area that two analysts might take on price action and yet bring out two different information. So it depends on a lot of information, it depends on the time frame they are looking at and things like that. So swing traders and trend traders tend to work most closely with price action, and they avoid any fundamental analysis. So they don't focus on anything like news or anything. Just focus on the support resistance level and then try to see if they can predict the breakouts, predict a reversal, predict if the market is consolidating or not. So you see where you can add as a trader, you can add some other things like observing the volume and then observing also the different time periods to also pick information. So adding all this information together, then it will help you to make a very good decision on your trading activities. All right. Now I must tell you there are limitations to price action. So price action has limitations. You need to understand this limitation. Like I told you, price action is not always 100%, because you can say price did like this before, it will do like this again, and you might be disappointed. So the fact that price has given a pattern before does not mean it's going to give the pattern again. And also it is very subjective in the area that subjective in the sense that 2 people or 3 people can go into technical analysis using price action and bring out 3 different information. So it is subject to your own interpretation. So different interpretation can come out from it, and they are still looking at the same price action. All right. So one trader may see a bearish downtrend, another trader might see that okay, this is a turnaround. Another trader might say okay, it's a ranging market, because remember it depends on the time frame that you're looking at, depending on how you are observing the support you are looking at, the resistance you are looking at. Quite a number of things are being looked at there. So this is part of the limitations of price action. All right. So you need to be very, very clear on your goals. So you can try and make it in such a way that you apply your trading decision on several confirmations. You try to make sure that you confirm whatever you want to do, whatever you have observed on several occasions, so that you are sure. And then, like I told you before, the past price action of a security is no guarantee of the future. It's not the fact that you can't say because price did like this before, it will do like that again. All right, so please have this in mind when you are using price action. So to conclude on the risks, I want you to also know that with the fact that you can't predict for sure 100% the future behavior of price, it means that trading using price action has risks. So please make sure that you are aware of the fact that it has risks, and then you are ready to take the risk. Because if the risks you are taking is high, and then it turn out to be that you get it correctly, the reward is there. However, if you get it wrong, the consequence will follow. So it might bring about a loss. So you set that in your mind so that you can wire yourself psychologically to be a trader. Being a trader means that you must have the mindset of a trader. All right. So what are the takeaway from this so that you can have this at the back of your mind? So the key takeaways from here is that you should understand that price action generally refers to the up and down movement of security or commodity or stock price when plotted with over time. when you plot over time, that is price action generally. So different looks can be applied to a chart to make trends in price action more obvious for traders. When you look at it from different looks, different approach, different time frame, so you understand to understand even better what price is doing. And then technical analysis, formation and chart patterns are derived from price action. You should note that technical analysis tools like moving averages are calculated from price action and projected into the future to inform trades. So you see, that's why you see indicators are designed as technical analysis tools to use previous information of the price action to predict the future pattern of what the price might be. So that way it helps to inform the trades that the trader is about to take. So you please have all these things noted in your mind so that you have a sound mind when going to trading. So welcome once again to our series on technical analysis, and in the next video I'll be talking on support and resistance, because it is very important when you know technical analysis and then you are able to go wide when looking at the chart. So that will help you to become even a more profitable trader. All right guys, thank you so much for your time. Thank you for watching all through. If you are new, please don't forget to subscribe to the channel, which you will really get a lot of benefit from it. And then let me know what you feel about this video. Like, comments in the comment section, and then let me know, give me your feedback. All right guys, see you in the next video on support and resistance.